So I swear that ICT is the first person who talks about it. I know that TradingView has been following ICT Twitter for quite a while now. I'm sure that this advancement is because of his impact. So all you need right now is really just SMT and opening prices. Hi everyone and welcome back to today's video. So I want to be talking about a one shot 1Q trade that I taken on ES and NQ. So if there's one thing I wish that you take away from today's video is that if you're still stuck on studying all the different PD arrays like your order blocks, inverted fair value gaps, volume imbalance, gaps, etc., just focus on SMT, divergence. There's a reason why ICT teaches divergence on month 3 before teaching PD arrays on month 4. So firstly, we have ES taking out previous week's high, and this was found on Thursday, 11:12 a.m. New York time. So in the beginning of the week, when market opens over here, I was anticipating for this high, this red line, to be taken out because it's delineated by this candle, bullish green candle. And then on NQ, it's this candle here, which is bullish and green as well. While on YM, is this red candle. So that's the first point I want to see price taking out before I anticipate higher prices. And that second higher level is delineated for the new week opening gap. Okay, easy, right? So we have two targets, market open, red line and blue line. So now coming into Thursday, price have already reached both of them. So what I'm looking for is lower prices. You can just look back on the previous video where I expect bearish prices because of the higher time frame analysis. I went into monthly and weekly, which is how I got that narrative. Going into the news, I saw that news release has already happened, and that was at 8:30 a.m. So in H1 time frame, when price reached into the new week opening gap, I was anticipating some form of a drop lower, but I did not participate in this drop because it was happening during London and pre-New York opening session. So I was not on the markets during this entire move down, right? And then I only managed to show up at 11:11 a.m., which is a lucky number. So by then, price have already returned all the way up into that area of interest for me. Okay, so this is also why trade timing is important, so that you don't get caught up in all this move that you think you should be a part of. So as I was looking at the bottom, I see that there are no divergence being given. So this means that I wouldn't be able to find an entry from this point even if I wanted to. So on M5, I saw that the market are just moving between the new week opening gap and the new day opening gap for all three of them. So I want to see like what range are we in? Are we sitting within, sensitive price range where price find it hard to break out of, or are we sitting at clear low resistance liquidity runs? YM have already taken previous day's high, while NQ and ES have not. So this is a sign for me to short the market. This might be the divergence for shorter prices, and the target being current day low and previous day's low. So here is the first target, and then the next target will be previous day's low, which is Wednesday. Here's my trade on the minute one. As long as the high of Nasdaq stays intact, this trade is 1:4. Entry point, stop loss above the failure swing, and then take profit, New York AM range, and ultimately the previous day's low. So coming back into the market, we see that NQ from the trade here and the stop loss up here has went down all the way before New York AM range low, going back into Asia and then coming back down on London Q zone, and then pushing further down to take out previous day's low of Thursday as well as Wednesday's low. So this is the kind of move you can be waiting for all week, like me. The reason why I've chose this previous day's low as the target is also because it is the new week opening gap. So you can see that on Nasdaq, throughout the entire week, it has been coming back here to the new week opening gap. So on Monday, we moved away, come back to it, move further. On Tuesday, we came all the way back down, did not close with heavy bodies, but a lot of wicks, coming back down on Wednesday before pushing to the next new week opening gap. Did not touch it on Thursday and coming back down on Friday. So the total one short one kill trade is 5.73R. So let's say if you are struggling with the PD arrays, first just look out for the SMTs. All the pink line are the SMTs that are drawn, right? So here we have a higher low, and then a lower low, and a higher low. And then as price move on, we continue to see this higher low, while we have a lower low over here. And price reach into the high of the week, giving us a higher high, a lower high, and a lower high. So without all this, like new week opening gap, previous week's high, or previous day's low, you can just target the previous divergence. So when you spot this one, you can just target this one as your exit. Your entry is given up here, and then your exit is given on the previous one. You see, it's so important that TradingView even came up with this indicator just for opening prices. So here you can see the symbol setting. You can find this electronic trading hours. The last Friday's closing of the black shaded area is the new week opening gap. And then just watch how price react during the black area, right? It came back over here at the black area timing, and then here at that timing as well. Here it did not, but here we are again. And one more observation is you can see all the divergence that I've been taking is within that timing window, right here, and here versus here. So all you need right now is really just SMT and opening prices. So I swear that ICT is the first person who talks about it. Like, I don't care who is the one that said it before him. It could be some book author or like someone that you read from 10 years ago. But he is really leading the advancement of the tools we have on hand for us to have an easy trading life. So you have to give credit where it's due. I know that TradingView has been following ICT Twitter for quite a while now. I'm sure that this advancement is because of his impact. Having like 1.6 million subscribers on YouTube, it's not just another entertainment channel. This is an educational channel that now even the tools that we're using to trade are being brought forward because of him. So here are the SMT that I've marked out without any indicators. And then if you add in a bit of the PD arrays, this is how they look like. And then if you add in the time aspect of it every day, and then we add in the session aspects now with the highlighted area. I feel like this tool will benefit people like me because now all I have to focus on is the areas where it's not highlighted, right? You can see these are the most sensitive area. So every time you show up to the market during New York session, you know that you're in good hands. So thank you all for watching this video. I hope you learned something from today. You don't need to know all the PD arrays that are out there. Just focus on the time aspect of it and SMT. Alright, thanks for watching. Bye.